Hi, I'm Dixon Gardner. I am a registered investment advisor in California. This is my video about my analysis of the stock with the symbol UAL, United Airlines Holding Inc. It's the parent company of United Airlines, the aviation company that I'm sure most of you are familiar with. This is a picture of my website, and in the middle of the picture is Mount Timpanogos. It's located about 40 miles south of Salt Lake City, Utah. I went to school nearby there at Brigham Young University for more years than I would want to admit. And on the east side of this mountain, this is a picture of the west side, is the Sundance Ski Resort, owned by a man named Robert Redford. So that's why I named my investment advisory service Mount Timp, because that's short for what the locals call Mount Timpanogos. Please come to my website and sign in with your email and send me a request for a discounted cash flow analysis of United Airlines, and I will send it to you for free. I also invite you to investigate signing me up as your investment advisor or to subscribe to my quarterly investment report. If you like this video, please click on the subscribe button, leave me your comments. I need to go into a disclosure and then we'll go into my views on United Airlines. This video is my view on United Airlines Holdings Inc., the parent company of United Airlines. You rely on these views at your own risk for any investment decision you make. I own a long position in UAL before I ever prepared this analysis. I have no plans to initiate any other positions in UAL within the next 72 hours. I am not receiving compensation for this video other than from YouTube if I upload it there. I have no business relationship with any company that's securities in this video. Past performance is no guarantee of future results. No recommendation or advice is being given as to whether any investment, including UAL, is suitable for a particular investor. You must conduct your own investment analysis and due diligence before you decide to buy or sell any security, including UAL or any other company. All right, the investment thesis for United Airlines is that demand for air travel is back. The TSA checkpoint numbers for 2023 show that it is almost on the par, if not above, the 2019 flight levels. In 2019, for example, in August, there was a 55 million air traveler passenger count. In 2023, for the same period, it's 56 million. In July, it was 80 million, and for 2019 and 2023, it's almost 79.5 million. In June, it was 76 million in 2019, and in 2023 for June, it was 76 million. May was 72 million in 2019. It's almost 72 million in 2023. So demand for air travel is back on par with the air travel in the United States between 2023 and 2019. So the air travel has recovered from the pandemic. And another statistic that the investment thesis of United Airlines is based on is that International Air Transport Association, the IATA, projects that air passenger travel will double from 2019 to 2037. 2019, it was almost 3.9 billion. 2037, IATA estimates 8 billion people will fly in the air, and that's a compounded annual growth rate of 4.1%. All right, so now let's look at United Airlines and see how it's exploiting this growth in travel. All right, so in 2019, United Airlines had $43 billion in total revenue, and in the 12 months ending June 30th, 2023, it has almost $9 billion in revenue. So that's an increase of almost $7 billion in revenue. EBITDA, which is a measure of cash profit from the income statement, was $4.6 billion in 2019 for UAL and is now up to $7.7 billion in 2023. And the EBITDA revenue margin, which is EBITDA divided by revenue, it's a dollar profit divided, or it's the amount of EBITDA divided by a dollar of revenue. So in 2019, it was 10.8%, and now it's 15.2%. So EBITDA per dollar of revenue is going up. You get 15 cents per dollar of revenue in 2023 versus 10.8 cents in 2019. Operating cash flow has exploded. It was $6.9 billion in 2019, and in the last 12 months in 2023, ending June 30th, it was $8.8 billion. Operating cash flow per revenue was 16%. Operating cash flow per revenue in 2023 improved to 17.4%. That's the amount of operating cash flow which is generated by operations of United Airlines divided by its revenue. So it's making 16 cents per dollar of revenue in 2019. It's making 17.4 cents in 2023. So profits are up on both measures. In 2019, there were 248 million shares outstanding. In 2023, there's 328 million shares outstanding. The price per share in 2019 in November, before the pandemic hit, was $90 per share. And UAL now trades at less than $50 per share, but for the math, I'm just using $50. Market capitalization in November of 2019 was $22 billion. Now market capitalization for UAL is only $16.4 billion. The market cap per EBITDA multiple to value what the market was trading UAL at in 2019 was 4.8, and the market capitalization per operating cash flow was 3.2. It's an average value multiple of 4. In 2023, those multiples contracted. The market cap per EBITDA was only 2.1, and the market cap per operating cash flow was only 1.9 for an average of 2. So United Airlines has increased its profits significantly while its value has been cut in half. So that is what you would define as a value stock, one where growing revenue and growing profit is not being rewarded in the marketplace. It's being punished. So to estimate how United Airlines is going to produce in the future, I did a per plane evaluation and column per plane for 868 planes. And this is to show the potential increase in revenue and profits that United Airlines can make by deploying 500 new planes they've committed to and have announced. So in end of June of 2023, for the 868 planes deployed, total revenue per plane was $59 million, EBITDA was $9 million, operating cash flow was $10 million. So in 2028, on or around June 30th, UAL will have employed 500 more planes. They plan on doing 100 planes a year for 5 years, so they'll have 1,368 planes. So I multiplied the per plane revenue and EBITDA and operating cash flow to project out what potential numbers could be realized. Again, these are subject to risks that we'll discuss in a moment after we go through evaluation here. So if United's able to continue its current profitability, and it has announced in its last quarterly phone call that it will improve its profitability, it will increase its margins, and it will fly more international flights, which have a higher margin than the domestic flights. And they have 45% of their inventory, i.e. called an available seat mile, which is total flights times total passenger capacity in all those flights. So it's the number of seats available. And they have a 75% load factor, which means 75% of their seats are full when they take off. They plan on increasing that. They also plan on increasing fares prices to travelers so that they have more revenue and make more money. So this may not be an aggressive enough projection, but only time will tell. It also could be an overprojection because of risks that we'll get into in a moment. So anyway, in 2028, there's a projected $80 billion in total revenue based on 1,368 planes being deployed. And there'll be $12 billion in EBITDA generated and almost $14 billion in operating cash flow, $13.9 billion. And if you multiply that by 4.8, the maximum multiple of the 2019 value of United, you come up with a $58 billion market cap or total value for UAL, and divided by the 328 million shares of 2023 gives you a price per share of $178. That's a 5-year internal rate of return of almost 30%. If you take the operating cash flow of 13.9 billion and multiply it by 4.8, you come up with a 66.8 billion total value of United Airlines in 2028. Divide it by 328 million, you'll get a price per share of $204. That's a 33% IRR in 5 years. Again, the planes are committed to be purchased. That's a 58% increase of the existing fleet and a compounded annual growth rate of 37%. So these new planes, if they remain profitable the way they currently are profitable, then you have a potential to make a lot of money. However, anyone who's been following the airlines over any period of time realizes that they're highly sensitive to the economy. When the economy goes down, airlines revenue and profits as well as valuations go down. And the risks that United has to face and overcome and manage to achieve the kind of valuations we just discussed. They'll have to increase the flight volumes through their existing airports. They have main ports or main hubs at SFO in San Francisco, California, LAX in Los Angeles, California, Houston, Texas, Denver, Colorado, Newark, New Jersey, and Washington, D.C. From California, UAL plans to have more flights to Asia. So this is a highly dependent forecast on China being an economic success and Japan being still successful, and that the rest of Asia succeeds. It also depends on Europe doing well because Newark, New Jersey, and Washington, D.C. fly into Europe. And Denver and Houston are United Airlines' gateway to the Caribbean and Latin America. So any region of those geographies that I just said, if there's an economic downturn for a long period of time, that will have a negative impact on the projections that we just went through and will prevent United from reaching those numbers. So one of the problems that United has to overcome is existing USA airports have maximum flight volumes because of the FAA flight controller system being outdated, and that has to be updated. So that once that technology comes in, they'll be able to have more flight volumes. They'll be able to have more flights. There's a current pilot shortage caused by COVID. That's being overcome because they pay better than other airlines. Again, there has to be economic success in China. That most likely will mean that the United States and China will have to continue having a harmonious economic relationship. That also means that America must keep growing economically. There must be growth internationally in Europe and Latin America. Also, United Airlines has to continue to operate their planes safely. They have to be secure against terrorism, pandemics. The weather has to be functional and conducive for flying. Can't be labor strikes and aircraft technology problems that would ground fleets and prevent United Airlines from having enough flights to achieve their financial goals. Now, another wild card that's not certain but is improving is the industry structure for airlines. There is 4 major airlines in America that have 100 million passengers a year. And that's 3 times what the 5th largest airline has. So there's concentration in the top 4 airlines. They may or may not engage in price competition to compete. In the past, price competition in the airline industry has meant little or no profits and numerous bankruptcies. So it's unknown whether this concentration through mergers of competing airlines, such that we have 4 major carriers with approximately 80% of the traffic in America going both domestically and internationally, will lead to rational pricing, the elimination of price wars, and that planes will be able to fly with a high economic efficiency. So that's still out. No one knows for sure how the industry will play out in the future. But United Airlines has bet the company that it will be able to make more revenue and more profit from its deployment of 500 new planes in 5 years than its rivals. Now, another advantage that United Airlines has is that it has $19 billion in cash on its balance sheet as of the end of June of 2023. Its total debt is only $31 billion, so it has a net debt of $12 billion. And when that's divided by operating cash flow of $8 billion, it's only 1.4 times. The cash flow is unusual, or the cash on the balance sheet is unusual for United Airlines because it is $58 per share and exceeds United Airlines' current price of $50 per share. And the $19 billion exceeds the $16 billion market cap. So United would be able to take all their cash right now and buy all of its stock back. Or United can use the same cash, the $19 billion, to survive another global pandemic for about 2 years or other economic crisis. So that cash operates as a buffer to promote operations, and if it's able to survive a very scary negative operating environment while its competitors have to file for bankruptcy, that would be an operational advantage for United Airlines. Thank you very much for listening to my insights, and hope you visit my website and give me your thoughts. Please subscribe. Thank you.